Welcome everybody to the Kit Talk with Kiet show, where we connect people, ideas, and capital to make a difference in the world. Today, I'm on with Kirk McKeown, the CEO and founder of Carbonark. Kirk and I will talk about his extensive career and entrepreneurial journey, as well as how to build a data insight business. Kirk, welcome to the show.
Hey, Kit, thanks for having me. Nice to see you.
Now, Kirk, you're a legend in the world of trading. I'm not sure people know. You work from a massive hedge fund, and I think you were one of the earlier practitioners of taking data and data insights for really building trading signals. And it's amazing in terms of what you've done, and you've actually created this category for the industry, in my personal view. So for the audience benefit, where we typically start with the show is to talk about your origin story. So what is Kirk's origin story?
Origin story, I spent the first 20 years of my career working on Wall Street. My background is I grew up just outside of Boston, grew up in Medford, Mass, and ended up going to high school, college, and business school within 10 minutes of my parents. Was really lucky with some of the places I ended up, but my first job out of college was working at a firm in Boston called Tudor Investments. I worked at the Boston office of Tudor. That was the public equities hedge fund of Tudor back in 2000. So we're going back a bit. It was run by a guy named Jimmy Pilata, who's a legend in sort of the hedge fund space, one of the early guys doing it. He partnered with Paul Tudor Jones in the early 90s to start the public equities branch of the Tudor business. And I worked in their venture capital group. So I ended up working for, a bunch of guys who were building the venture business inside of Tudor. And my first job was I was cold calling CEOs and CFOs of private companies to see if they needed money in 2000. So I was building lists and calling companies during the first internet bubble, and trying to drive deal sourcing. East Coast VC is really sort of grounded in all of the basic tenets that Summit Partners and TA Associates, which are vanguards in the private equity space in Boston, they sort of institutionalized and revolutionized deal sourcing by calling CEOs and building relationships over a long period of time. And we executed against that model at Tudor. And I was the junior guy doing that back in 2000. So my first real job was literally just cold calling and learning about different parts of the sort of the tech economy and building out comp sheets and understanding, basic mid to late stage tech models. And that's where it all started. Had a great experience at Tudor. I was there for 3 years. Then went back to business school. I went to MIT Sloan. Had an awesome experience there. It was a meaningful time in my life. Learned a lot. I was an immature college kid. I wasn't ready for college. College wasn't ready for me. But business school was a period of 2 years where I learned and grew quite a bit. And then I ended up trying to come down to New York to work at a hedge fund in the city. And so I embarked on that process in late 2004. To get a job down here after graduation.
Wow. And so how did that get you to utilizing and looking at data for trading? Because if I understand, you used to spend $100 million a year on just buying data, right?
That's a lot of dough. It certainly wasn't. We spent some money, but it wasn't like that. Sort of how I got to it was a traditional to non-traditional research path, right? So I ended up interviewing in 2004 and 2005 at so many different places down on Wall Street. And in the hedge fund community was very different then than it is now. It's really institutionalized now. There are thousands of hedge funds. Back then, it was much tighter, much closer knit community. I didn't have banking in my background. I had a shaved head. I was super green. I had worked in mid to late stage tech VC. I didn't have that 2 years in banking and 2 years in private equity resume. And so I actually really struggled with interviews down in the city, in the spring of '05. I was driving down in a beat up, beige Taurus, this Ford Taurus. I was whipping down the Merritt like every other Thursday, and I was meeting with all these different funds and pitching ideas and doing the thing. And I was having a really hard time, getting traction. And I was given a project by a hedge fund to look at the Sears and Kmart merger, which had occurred in sort of late '04, early '05. Eddie Lampert had used Kmart to buy Sears, and Gary Balter was the only publishing analyst. And I had this horrific interview on a Friday afternoon at a fund in Midtown, where one of the principals told me that I'd never work on Wall Street. And I ended up walking out of there, and I was like so distraught. And I ended up driving back to Boston, and I had this interview the next week, at this fund. And I locked myself in the computer lab at MIT, and I took all the skills that I had learned at Tutor, which was like cold calling and cold emailing to get people on the phone. And I used that to inform the assumptions in my model for my interview the next Friday. And so I got to the head of supply chain for Scott's Miracle-Gro and Procter & Gamble and Whirlpool. And I talked to the former head of supply chain for Sears to understand costs and distribution improvements that could be made from combining the supply chains and inventory management on buying better. And I walked 30 stores over the course of that week to understand planograms. And I put together this merger model that was held together with duct tape. And I walked into this interview, and the guy sitting across from me looked at the model for 10 seconds and then looked at the call list of all the people I had talked to, because I had called like 70 people around the name. And he threw the model away and he said, "How did you do this part?" And I was like, "Oh, this is interesting. I actually have something here." And they're like, "Can you do it again? Can you replicate it?" And so they gave me another project on Goodyear. And I did it again. I talked to all the distributors. I talked to private equity firms that were rolling up the space. I went into retail stores. I talked to rubber manufacturers in, South Asia. And like, I pulled it all together. And then they offered me an unpaid internship. And I was like, shit, I got to get paid. So, but at that same time, I had these projects. Now I had this body of work, and I had this process that I was sort of implementing. And a couple of folks from my life, Jimmy Pilata being one of them, made some introductions for me. And I ended up meeting with, sort of David Winreich over at Oxif and Larry Robbins over at Glenview, and went to final round interviews with those guys and didn't get jobs. But they ended up being sort of people that I later worked for Larry, who was instrumental in my career, but, sort of had long-standing relationships with like these really great guys, in part because of that work. And I ended up working at Hunter Global. Hunter Global was like $1 billion shop. Duke Buchanan ran it. And, I got hired and went in there and immediately was given the for-profit education space. And they basically said, do the work you did on Sears on the for-profit education space. So I became sort of one of the big primary research guys in for-profit education, sort of had a negative view on the space, which ended up manifesting over the next couple of years, but did a ton of work really getting in the weeds of how those businesses work and how to uncover information and how to do it in a legal and compliant way. And then, towards the end of that year, Glenview was opening a London office, and I got a phone call to be the junior guy helping to open that office. And so I ended up, making a career, sort of decision, and ended up at Glenview at the beginning of '06 to move to London and actually sort of get my passport for the first time. I grew up as a townie kid. So like, it was like this, like, it was a structural change. It was a decision to move and go somewhere else. And so ended up over at Glenview, and I was an analyst covering consumer and tech. But the whole time I was there, I started getting these asks from Larry just to sort of say, hey, remember that project you did for Sears? Let's do that over here on this. Let's do the deep dive on this. Let's do the deep dive on this. And so what really formed wasn't necessarily around data. It was around fundamental research. And it was around, collecting and synthesizing in a primary way all manner of data and observation. And the way we were doing it at the time was through conversations and supply chains, right? And so my training, the cutting of my teeth per se, wasn't in data at all. It was in, human intelligence, physical collection, and channel checking for all intents and purposes. And that's where I think the real juice is, because you have to learn the businesses to understand the nuance and to catch and measure the change and inflection in underlying, transformations of supply chains and ecosystems and value chains. And if you don't know the domain, you can't understand how things are coming in. And that became the training ground that made for, sort of the opportunity later to sit on top of these big data businesses, because they're really just research businesses that are powered by data. And so sort of Glenview is this incredible place where I got my sort of what I always, I got a ton of information and understanding and education around how fundamentals work, how market structure and business models work, how different domains engage, understanding unit economics and rate of change and all of the things, because we took such long cycle investments and held things for a long time. We had to constantly test theses and make sure that they weren't changing. And so learned a lot about that process and how that all worked and how investors truly think. And so that was a great formation period for me. And I was there through 2008, and I did a ton of traveling at that time. And it was a meaningful education experience. And I learned from some of the best guys out there.
Yeah. No, I'm surprised you moved back, because I've seen people like go to London and never come back, right? Like what's your decision to come back from London?
Well, I was an analyst over there, and I was doing a lot of the calls work that was starting to form. And at the end of 2006, sort of Larry tapped me on the shoulder and said, "Hey, you've got a skill here with doing calls and understanding how these supply chains work and really scaling a primary research framework. So why don't you build a group and build a team that does that?" And so over the course of the next 2-3 years, built a team of 11 people on 2 continents, doing several thousand calls a year, tracking change in 60 to 100 supply chains globally. And we were the biggest guys on the street for collecting information in sort of that systematic research process way. And we were doing it with the right approach to compliance. And it was this meaningful, sort of research build. And it was best done in New York with the core team. And so we ended up building that, and it was an amazing build over several years, and managed through sort of the federal investigation into how people were getting their information and what they were doing with it. We built our own database of people that we spoke to and tracked change on a monthly basis. Hired and trained dozens of people, many of whom still work in the industry and are doing well at different funds and investment managers across the street. Some of them are not, but most, sort of it became this really cool ecosystem at Glenview. And, I credit, certainly Larry, and then John Roden with and Randy Simpson with a lot of, sort of hands on the rudder and sort of feedback and giving us the space to really build something cool.
Yeah. So how do you transition from this deep channel checking with People Map to now using alternative data and data analytics to build now a new way of insights? I guess some people call it quantimental, whatever you want to call it, but using non-traditional data to really start doing what you were doing, right? Well, making those phone calls and finding out and building these early warning signals, I would imagine.
Yeah, what's cool about it is you're trying to solve the same fundamental problems, right? If you look back to 2009, 2010, one of the core, sort of functions and products coming out of our consumer business was figuring out what comps look like. At the time, retailers still reported comps. You were trying to understand monthly cadence of momentum around traffic and ticket across, mass merchant, across, department store, sort of dollar store, specialty retail. And then credit card data came along, and comp retail sales largely went away. But, sort of consumer channel checks became less important because data was a strong substitute, right? What you sort of started to see was, collecting through conversation and survey is a meaningful way that, sort of to get information in a fundamental way to inform the business problems you're trying to understand. Data does the same thing. It just comes in through a different modality and requires a different set of skills and, frankly, a more complicated build, because you can actually have the same person who's doing the calls also synthesize the outcomes and then derive the report, right? You can also use AI to do some of that now, but like at a fundamental level, that same person who's covering that space is actually the one that's delivering the insight. With data, an engineer's touching it first. Then you've got a scientist who's making sense of it. You need a business analyst who's going to marry the fundamental logic that's required to get into the data. So you actually have to build a cultural insight machine that requires multiple touch points, different components of the business, and you have to build a factory to a degree. But what's underpinning that and underpinning the calls is a deep fundamental understanding about an income waterfall, an industry dynamic, how supply chains work, how lead times work, how build schedules work, supply dynamics, demand dynamics, price elasticity. All those things matter in both constructs, and that's the tether, which makes it sort of like it's a research business powered by all manner of data and observation. And what you're trying to research is sort of something that is happening to a thing, i.e. a company or a brand or a zip code or a cohort of people, and then an event that happens, and whether or not that event has an impact that's better, same, worse than expectations. Fundamentally, that's all we're doing. Entities, events, and impacts, right? And and whether you're running supply chain checks with 23 to 25-year-olds who are banging on calls 8 hours a day, or you're sort of building a multimodal, multi-tiered, data set driven understanding of the heavy truck industry, right? You're still trying to solve the same problems. So the requirement is the business logic and the structure that you build on top of the data to allow for it to talk to everything else.
Yeah. And in your view, this used to be a way to generate alpha for a hedge fund, right? Is it now really more of a beta? Like if you're not doing this, like you're behind the 8 ball because everyone else is doing it, or you think
that's a nuanced question. I think it depends on where you sit in your investment cycle and your investment stack, right? Like, do I think that a bow post, just to pick, someone who invests over 10 years, do I think that they, sort of it's table stakes for them to have a credit card? Probably not. I wouldn't want to speak for them. I don't know them. I'm just using them as a brand that's incredibly well known and incredibly well respected, in the space. But if you're playing in sort of the 30 to 60 day holding period, you're turning your book 12 times a year, up to like 6 months, there's an information arbitrage game that still exists. And if you don't have certain data sets that are proliferative across the street, you are playing at a disadvantage around, sort of having a better understanding of, business momentum and, sort of underlying, components. You can see that with credit card data. Credit card data is table stakes, right? There are, sort of several panels on the street. Most of the large players have very mature, informed, and well-structured pipelines around collecting and synthesizing that data. And wherever time and frequency become components of a data set that are valued, that it's getting to a place where you have to sort of start thinking about a table stakes framework where it becomes beta. Sort of today's alpha is tomorrow's beta, and that's generally, I borrowed that from a guy named Michael Watson, who I've met. He's a really talented dude. But in the same vein, alpha also moves around quite a bit in markets and within organizations. And where you capture alpha today is different than where you captured alpha 5 years ago and 8 years ago. And so, one of the great things about the great operators today, the biggest funds in the world that we all know and love, like those guys just understand how to navigate and adapt and evolve around where the alpha exists in the ecosystem. And that means that they're just better at understanding competitive advantage than everybody else. Right. And that's your big guys. That's obviously, Mr. Griffin and Mr. Cohen and all those sort of guys who have made money in every market over the last 50 years, right? Like period full stop.
So everyone dreamed to have a big job in the hedge fund world. You were sitting there, in the place you want to be, but then all of a sudden decide to walk away and build a business yourself. Like what inspired you to go launch Carbonark?
So it's a good question because I had this long career on the street and leaving my last shop, Point 72. Like it was a conversation in my head for a long time, because it was truly this special place that I had grown up at. Right, I had been there almost 9 years. I got there in 2012. And I got to work with some of the greatest minds in the history of investment management, and got to build a lot of really cool things while I was there. I built a business called Canvas, which was sort of a calls-centric, supply chain-oriented fundamental research shop, which has done sort of really well inside that organization. Started the Point of the Spear, which is the sort of last mile business, trying to get data to work inside the organization. So like early days of sort of really marrying business logic with data. I got put on top of the market intelligence function, working for Matthew Grenade, and got to sort of really get that to a place where it was in a good place. And so it was one of those things where like there are two reasons you leave a place: the reason you leave and the thing you're running to. And at the end of the day, it was sort of towards the end of COVID. And, I think COVID was a reflective time for a lot of people. And I was sort of looking at things and I was just like, oh man, if I don't go take a swing on some of the ideas that sort of have been percolating in my brain over the last couple of years around where the data market needs to go for it to be a real thing, I'm never going to do it. You know what I mean? I'm 47. Like, this, I think I like to think I'm a young 47, but I'm still 47. And if I didn't take that shot, I was going to wake up and look back and just be like, woulda, coulda, shoulda. And like, I also like chop and I like getting into it. And if I'm getting comfortable somewhere, it usually means it's time for me to start moving. That's just the bane of my existence. But left in February of 21 after a bunch of great conversations with people inside the organization who were super supportive and wished me the best. And I left amicably as a partner and friend, which is great. I started Carbonark with a co-founder. I am a co-founder, not a founder. And started Carbonark and started building and really took a big swing, and so think that there's that the data as a space, as an asset class, as an ecosystem, as a value chain is ripe for massive disruption here. And I think if AI is in the first inning, we're still warming up with data. I think there's a massive opportunity to do some transformative things in the space. I know you guys are similarly aligned philosophically. And so we just started building and started really sort of, putting our philosophy and our vision into the market and into code with the idea that if it doesn't work, it doesn't work, and we'll figure it out. But if it does, it'll be really cool to see something that has been sort of forming and shaping over the last decade really come to fruition.
No, that's amazing. And, that whole, minimal regret, was really the same reason why I left what I was doing to really go build something, because the opportunity is now, right? Especially the age that we're at. But just drill in a bit more about Carbonark. So what is it that Carbonark is solving? Like tell the audience a bit about the solution set itself and what it does, and also I know when you and I had lunch, like you actually went out as a startup, bought like tens of millions of dollars of data as well, right? To build this out. So talk to the audience a bit about that.
Yeah, sure. So Carbonark, it really was founded on the idea and belief that if you look at sort of how data is bought and sold in the market today, there are a number of different imbalances and it's wildly inefficient, and there's a lack of standardization. And for the importance it is as an asset class, particularly as AI has shown a light on the importance of data to be in the right space and in the right structure, and certainly sort of, in the right IP framework, all of these different elements, sort of they're real needs, and there's no way to really address all of those. And, as far back as 2016, 2017, sitting in the seat that I was in, looking at sort of what we were consuming to make better decisions, understanding underlying cash flows in businesses to trade stocks. For all the data we had, when we would sort of be out in the market and talking to folks at companies and everything else, we had crazy visibility, and it turned out that data was a really hard thing for most people to come by. For all the data that exists in the world, very little of it makes it into the hands of decision makers. And sort of malinvestment in the cloud by VC, which created a lot of silos and a lot of data that didn't talk to each other, to big tech, sort of hoarding data through surveillance capitalism, data monopolies like some of the shops you worked at that stifle innovation of startup data sets and startup data companies, sort of Nielsen, IRI, which are based on sort of like old panels and old technology. The walled gardens like Snowflake and Databricks, which want you to come in but don't want you to leave. Like, at the end of the day, all of these things contributed to these massive imbalances in the way data moves around. And so you actually just don't have, and then you get supply and demand too far apart, because you need all these people to work on the data to make the data performant to power a model or a decision element, right? And so you have all these problems, and then it's easier to buy a data set. It's easier to buy a house or a car in the United States than it is to buy a data set.
That's right. That's exactly it.
And not only that, you've got problems with privacy. You've got, sort of jurisdictional issues around sort of who can touch what and where, sort of from a consumer protection perspective. You got to marry it to the business logic. And so there's just this really difficult sort of frame where supply and demand are too far apart. The clearing price for every data set that comes to market is at least $200,000, which wipes out the long tail of corporate customers that actually want to play. A lot of the companies that were servicing Wall Street tried to service corporate, but they brought Wall Street product to corporate. It's a different use case. All of these different things were coming together, and I was just like, I was talking to folks, around the hoop on this build. And we were just like, there's a better way to do this, right? So let's go do it. And so if you're gonna start playing in the data space, there's sort of two ways you can go. One, you can partner with large data providers and sort of do revenue shares and sort of go to market that way. And that's a quick way to get some wins. But you end up having a hard time scaling away from that core vendor. Number one, and number two, the economics are never going to really work. We went out and raised some money from friends and family. We bought, we legged into a bunch of data around how people spend their time and how people spend their money, and we started building a platform. And that platform really structures the data across modality around an entity structure that scales really well, which is there are companies, there are brands, there are people, and there are locations, right? And once you sort of break out your entities, you can then start to look at KPIs and metrics and factors per each of those entities, momentum and resonance and persistence. You can look at KPIs that are traditional KPIs, non-traditional KPIs. You can start to really leg into vertical fundamental understanding. And then you layer on event calendars that allow for you to start to say, okay, what are the types of events that exist against these entities? And event-driven, catalyst-driven research is what people actually do everywhere all the time, whether they're looking at an advertising campaign or they're looking at a 3-day weekend or they're looking at Black Friday. And then everybody's measuring how that looked versus last year, versus last week, versus last month, and versus expectations. It's all formulaic and all structured. So why not do it, right? So that's what we started doing. And, we're in the market. We're selling sort of an entity structured API that delivers time series elements to companies in financial services, healthcare services, experiences, brands, and sort of really pushing to those folks, sort of thousands of API endpoints around those basic problem statements around how people spend their time and money across dozens and dozens of data sets. And we're pushing it out in a consumption-based framework. So we're allowing people to take what they need rather than pay for the whole hog, right? So like that we basically looked at how data is bought and sold in the world, how insight is created, how data is the input of that. And we sort of said, okay, let's flip the whole thing, right? People pay big license fees. Let's work it out that they face up with us, and we make sure that we're creating a consumption market where they consume elements, and we turn around and make sure that we're aligned with the suppliers, and they get paid, and they get transparency and visibility into how those work. And then sort of that's one. And then number two is like let's give them the flexibility to ask the question they want to ask, not the question that the data set that they're thinking about allows them to answer. And then let's create the pivot points so that people can look at brands by location. People can look at companies to brands to personas, and then start pivoting around those in a really dynamic way, because then all of a sudden, sort of you can start to get, professional hockey teams working in the data alongside professional traders, working alongside people who are in Hollywood, working alongside people who work in hospital systems. And that's a real thing. And they're all pulling off the same data, but looking at it for different business use cases and business logic, because we're all tying it back to cash flows. And so, made a big bet. At the end of the day, we built this really, scalable platform. And the folks are sort of the team on the field is working really hard. It took us a while to find product market fit. We went to market first with sort of a big insight terminal, and frankly, it was really powerful and really rich and really textured data. But you needed to be a super user to get it, and it wasn't the aperture to enter the market. And so we went back to the drawing board. And look, sort of, I was either naive or arrogant in thinking that I had built businesses before at Glenview and at Point 72. And I was like, building a business is I've done it a couple of times. I hadn't. I had built businesses inside of large organizations with, sort of a team of folks that were always having my back, and, sort of hedge fund founders that, believed in what we were doing, and a captive customer base. Building outside, it's like the difference between building on an aircraft carrier on Lake Michigan versus a Boston whaler in the North Sea. It's like, trust me, like it has been gratifying, humbling, and really, really hard. But sort of we are in a place where I think sort of the platform's in this really compelling space, and the way we're going to market is so differentiated that we're starting to get some really cool conversations with some really big firms that are trying to figure out how to power AI ML innovation inside their organizations, but they want to do it with OpEx, not CapEx. And they want to be able to see from end to end what it is they're using to power their models. And so we're building into all of that and having some fun with it. So it's pretty exciting time. And I think we were early, which means we were on time.
No, exactly. And it sounds like, you may not like this reference, but it's like you guys are, building the Spotify for data, and right now you're onto where you're enabling playlists, right? These specific use cases like playlists. And I think like until Spotify started creating playlists, it was really hard to use the platform because it was just too much to search for, right? And now you're saying, hey, you're contextualizing these playlists of use case of things that you can use, and you connect that to the workflow, right? And the workflow is not just for trading, to your point, is to run a business as well, because these insights can help you better run your business. Then whether it's a hockey team or whether it's a hospital, etc.
Oh, that's right. And to your point, like, being compared to Spotify is, I'll take that all day. Sort of, I often try to, I talk in analogies a lot. I'm still trying to figure out which, sometimes, because at the end of the day, like I actually believe that data is money, right? And like people will say data is oil. People will say, we think data is electricity. That's what carbon arc comes from. But like fundamentally, if you look at every market that data gets compared to, there's a market for it, right? But there's no fungible market for data or insight, right? And so, everybody's like, say data is the new oil, sure. But like, we're not, when I go to the pump at the Mobile down the street, I'm not buying a barrel of, Venezuelan crude and refining it before I put it into my car. Oil goes through a number of different touch points. There are pipeline companies that touch it. It gets pulled out of the ground by, sort of a driller. Depending on the type of technology, it could be a frack, or it could be a deep well, it could be a deep ocean well, and then it gets pulled in and it gets pipelined to a refinery where it gets broken up into commodity chemicals, into derivative distillates, into airplane fuel, into sort of traditional gasoline, truck gasoline, diesel, all these things, and then it gets moved again. And it gets moved by truck, it gets moved by rail, it gets moved by barge, it gets moved by pipe. And then it ends up where it ends up powering something. And then there are carbon credits on top of it. And there are like global multinationals. There are wars fought over it. And like, that's oil. And so when they say data is the new oil, it's like, okay, well, you haven't developed any of that market structure. There's no market structure for data, right? And like, you can't have the largest, sort of, AI, the largest, most popular AI company in the world getting sued by New York Times for their use of their data, and a company that just went public, Reddit, selling their data for $60 million to Google to train models, and say that these are functioning markets.
That's right.
At all. Like it's so I sit here and I'm like, everybody talks about data and everybody talks about AI and regulating AI, and they talk about sort of like the chip shortage, and like, at the end of the day, nobody's talking about the fact that everybody's looking at the wrong problem. The problem is the bottleneck in data, which is a market structure problem. And you solve your chip problem and you solve your regulation problem by regulating the uranium. Like at the end of the day, you regulate the uranium, you don't regulate the permits on the power plants. And so there's this really fascinating game where the lens has actually been looked at, sort of the payload and the semi, and like it's semis, like, you got to break up your structures. Like everybody's boiling the ocean right now.
Exactly.
And like, by the way, compute and chip don't care because they don't have to worry about the outcomes. They just turn the winch, right? And so like at a fundamental level, it just feels like everybody's solving the wrong problem. And we're trying to solve it by breaking things up into the problems that people want to solve, creating the right payloads for those problems to be solved in a dynamic way, such that we actually think that the only thing that needs to move is the insight. And we think you continue to compress the insight down in the same way that you compress, think about like this. In the 1910s, there was no functioning stock markets, right? And if you wanted to buy and sell companies, you bought and sold companies. It was pre-antitrust and all these other things. By the 30s, you could buy, stock issuance. The SEC was around, and I could be wrong on my early dates, but the 30s, the SEC was around. There were market operators buying big blocks of companies and selling big blocks of companies, what have you. And then you fast forward to today, you can trade factors. You can trade brand factors and resonance factors, and I can buy a Macy's ticker, M, on my phone with no commission right now. And that is thousands of stores and hundreds of thousands of employees and supply chains and a global network of companies that are cutting and sewing cotton to make jeans that go into the Macy's in Herald Square. And I can buy a representation of their cash flows on my phone. In the same way, data and data structure will eventually get there, right? And like the thing that is going to power models will be the factors that are underpinned by the data sets that everybody's using today, plus all the data sets that are going to come to market over the next 3 years, right? And so there's just no place to do that in a centralized, scalable way that manages the whole frontier and the whole ecosystem. And marrying your data with all the other data that exists out there makes for better outcomes. And that's the whole pitch, right? And so, fundamentally, that's what we're going for and what we're going after. And, I'm comfortable talking about it because like you still have to go do it.
Yeah.
And it's brutal. It's a brutal build. And
no, it is. And also, I mean, you accelerate the discovery process because there's too much noise, too much data. People say, I have data, something. No, like data without context is meaningless, right? So you're accelerating the discovery process and you're lowering the total cost of ownership. I mean, I was talking to this friend of mine who's pretty senior in terms of he buys a lot of data. He's like, kid, for every dollar we spend in licensing data, we spend $3 to $5 in just getting that data to work inside our doors, right? And with what you're building, it actually accelerates discovery and it lowers the total cost of ownership, which is important in this day and age that we're talking about. Right?
To your point, Kit, like in terms of discovery, the discovery actually moves to the insight that the problem you want to solve, not the data set you need. Because like back in 2016, 2017, there's a finite number of places to go. You can be like, oh, this is a credit card answer, or this is a receipt answer, or this is an app question, because we're looking at engagement and we're trying to understand, the engagement of Netflix and time spent in the app versus, Disney Plus as they came on in 2019 or whatever. Like you could actually define a problem and then a solution based on the data set. But like, that's when there were like 100 commercial data sets that existed for all intents and purposes. And now there's like 2,000 or 2,500, Brad Schneider's doing a good job over at Nomad, cataloging the space and sort of creating a search function, right? I still think that's sort of like, it's like looking at houses when you want to rent a room for a night or you want to stay at a hotel for a week, right? So like, I do think that there's some element there to work through, but, sort of at a fundamental level, sort of what's going to happen when there's 100,000 data sets. It's not about the data set. It's about the question you want to ask and the structure with which you ask the question to solve your problem. Because like people don't want to be sifting through thousands of data sets to figure out which one's the best one to answer their question. They just want to answer their question. They want to move on. Because at the end of the day, if your job, if you run a hockey team, is to put a puck in the net. You know what I mean? If your job is selling coffee, it's driving persistence in your customer base and not losing them to Starbucks, right? It's increasing day part. You know what I mean? It's like it's adding to the menu. It's driving sort of the right loyalty programs. It's not which data set do I need to do those things.
Yeah, because people don't wake up thinking about data sets. They wake up about I got to solve this. I have this question I need to answer, right? So
that's exactly right. You know what I mean? And like, by the way, like what is Morgan Stanley Wealth Management doing? But they're selling safety. That's what they sell. They sell safety. Right. And so like, and that safety comes in a sort of a non-volatile, sort of low sharp return over a long period of time. And they get paid on assets. And so that's what they do. They don't go out and find all the data that needs to be found to acquire folks from other private wealth managers and or manage the data, manage the P&L better. That needs to be brought further along because, otherwise you sort of run the risk of like everybody becoming like, not everybody's a private equity shop. Not everybody is a hedge fund. Not everybody's a thing, So like fundamentally, the more work you can do to structure transaction data in the right way, and transactions are actually the thing that measure an entity, an event. It's when they have a transaction. You structure that in the right way, and then it allows for really facile outcomes that people can make more decisions on, right? So we're at the end of you're trying to drive a higher hit rate on your decisions. So being right more often, create new incremental at-bats that you couldn't see before because the data surfaces them for you, or allow for you to make bigger bets, right? Those are the only three things that data can do for all intents and purposes. And so the key of any good insight business is to help with at least one of those, if not all three.
Yeah. Kirk, thank you for being on today. That was amazing. Now, usually where we end the show is around, how can we help you as community? So, what are types of people you want to connect with? And, what can they help you with from that perspective?
Look, we're the company has been sort of largely outbound in terms of, we've had a great network of friends and investors, sort of Liberty City Ventures is our core institutional investor. Jimmy Pilater and Raptor also are an investor, but they've been incredible with introductions and engagement, as well as our network of friends and family. But having more and varied conversations with folks who are interested in sort of digitally transforming their businesses and getting data to be more part of their decision process. Taking inbounds, would love to meet people. That would always be sort of welcome and needed across industries, sectors, and geographies. So we're excited to sort of take this thing to the next level, and to do that, it's going to require sort of density and velocity and insight downstream. And so the more people that we can get in our data, the better this thing's going to work.
Amazing. Thank you, Kirk, for being on today, and to the audience, thank you for your continued support. Have a great weekend, everybody.
Thanks.
Bye-bye.